Hello everyone and welcome to Study IQ English. I am Joycey Joy. In this video, we will be discussing about tax reforms in India. So let's get started. First, let us see what is taxation. What is taxation? Taxation is actually a fiscal policy, which means that it is a policy of the central government or the government of a country. So taxation is an important exercise for economic and social development. It is a form of collection of revenue by the government, which the government uses for its economic as well as social development. It provides a resource to use goods and services to the people. That is, we can say that taxation is a way by which the government gets revenue from the people and which in turn government uses for the social and the economic development of the country. Various tax reform committees were constituted in India in 1971-77, but all they suggested ad hoc measures focused on impending crisis. Ad hoc measures means temporary measures. Even though tax reforms were or tax reform committees were constituted in the country in 1971, 77, etc., they all suggested ad hoc measures. Ad hoc measures are temporary measures. Temporary measures which were focused on impending crisis. That is to meet the crisis prevailing at that point of time. The Tax Reforms Committee of 1991 suggested a reduction in the rates of major taxes. Now see the period at which this committee was formed in 1991. Can you draw a relationship between the 1991 reforms and the tax reforms committee? Yes. When we adopted 1991 reforms or the new economic policy, then almost all the sectors of the Indian economy was reformed, including the taxation sector. So this committee suggested a reduction in the rates of major taxes. That is, many of the major taxes like the customs duty, individual tax, that is the individual income tax, corporate income tax, excise duties, etc. were reduced, or this committee suggested the reduction of these taxes to a reasonable level, maintaining progressivity. So one of the major recommendations at that time was to reduce the tax rates to a reasonably low level. Next, we are coming to the issues with India's taxation system. First thing is that it is retrospective in its nature. Retrospective means that there is a chance of creating inequality. So retrospectiveness means chances of creating inequality. And this has impacted the inflow of foreign capital into India. Second one is the unstable policy environment, which means the policies and the legislations or the rules governing the taxation are changing. It keeps on changing. Third, a complex web of taxation laws. That is, there is multiplicity of laws and there is a complex nature of taxation laws prevailing in the country. Increased threshold provided in case of personal income taxes and exemptions, tax cuts, preferential tax rates, deferral of tax liabilities, etc. lead to a lower tax base. So, lower tax base. Lower tax base means the total income upon which taxes are levied. Total income or total value, we can say, upon which taxes are levied. That is tax base. These are the reasons for a lower tax base: increased threshold and exemptions, tax cuts, preferential tax rates, deferral of tax liabilities, etc. Tax evasion and corruption undermine the governance practices by the state. So tax evasion, that is people who does not pay the taxes, and then corruption. Weakness of tax administration, such as lack of technical expertise, financial resources, poorly drafted laws, corruption, all these things have led to weakness in the tax administration. Then next we have structural issues in taxation like low financial literacy, large share of informal economy, large number of cash-based transactions. All these have led to structural issues. These are structural issues, that is problems in the structure which requires a long-term reforms that can change the problem. Next, we are coming to direct tax reforms. We know that the taxes in India can be classified broadly into direct taxes and indirect taxes. First, coming to direct tax reforms. Direct tax in India is progressive. Progressive in the sense that more of taxes or more tax rates are charged from those who have more income. That is progressive taxation. Direct tax is a progressive tax in India as the proportion of tax liability rises as the income's individual increases. That is, the tax rate increases when the income increases. Tax rates are high when the income, taxable income of the person is high. Examples of direct taxes are income tax, corporate tax, dividend distribution tax, securities transaction tax, fringe benefit tax and wealth tax. These are all the examples of direct taxes. Now these are some of the committees. Arvind Modi Committee on Income Tax Reforms, Abhilesh Ranjan Panel on formulating new direct tax code, aims to revise, consolidate and simplify the structure of direct taxes in India. So these were the major committees related to tax reforms. Now we will see what are the need for direct tax reforms in the country. First one is rationalization of income tax structure. That is, the slabs has to be rationalized. The urgency to simplify the corporate tax structure. That is, complexity in the taxation should be avoided and there should be a simple procedure for the establishment of taxation. To widen the tax base, which will potentially increase the revenue for the government. The tax revenue for the government would potentially increase. Then maintain the balance between direct and indirect taxes. A balance between direct taxes and indirect taxes has to be maintained. Now coming to the measures taken by the government, various initiatives were launched to increase the tax compliance. First one, e-Sahyog portal. So this is an online portal, electronic portal. This is used to facilitate online filing of returns, extension of Indian single window, custom single window interference of facilitating trade, etc. Second example is simplification of tax laws. That is, the complexity or the complex nature of tax laws has been reduced. Third is providing relief for startups with capital gains exceptions from the sale of residential houses for investment in startups, etc. Third one is capital gains exception so that investment increases. Fourth is providing various anti-tax avoidance measures like general anti-avoidance rules, advanced pricing agreements, etc. This is to reduce the avoidance of paying taxes, thereby increasing the potential of tax revenue for the government. Increase in the potential of tax revenue for the government. Next is Direct Tax Code DTC. The Direct Tax Code was envisioned to consolidate all the direct tax laws of the central government. That is, to bring together or to consolidate all the direct tax laws. To bring together all the direct tax laws. Direct Tax Code intends to bring horizontal equity among different classes of taxpayers in line with best international practices. So what is the purpose of Direct Tax Code? To bring a horizontal equity. That is, horizontal is like this. That is, to bring equity among different classes of taxpayers in line with the international best practices. It will phase out multiplicity of tax exemptions and deductions, and this will help in widening the tax base. That is, more number of people will pay taxes. This will also increase compliance. Now, this is the proposal for Direct Tax Code. The government adopted proposed increased tax slabs in the financial year 2012-13. Corporate income tax should be 30% with no surcharge on corporate tax. Minimum alternate tax 20% from earlier 18.5%. But we will see that again in 2019-20 government had reduced the corporate tax rates again to 22%. Next is vivace vishwa scheme. The scheme was enacted with the goal of reducing the pending income tax litigation. That is, to reduce the pending litigation or legal procedures with relation to the income tax or income tax related litigations to be sorted out or settled at the earliest. To generate timely revenue for the government and benefit the taxpayers. The individuals or companies that opt for the scheme are required to pay a requisite tax, following which the litigation against them are closed by tax department and penal proceedings are also dropped. Next is faceless tax assessment scheme. The taxpayer or the assessee is not required to visit an IT department office or meet a department official for income tax related business. That is faceless. Everything can be done through an online platform without meeting the official or without meeting in a physical platform. Through an electronic platform, this can be facilitated. It was launched in 2019 to promote an efficient and effective tax administration, minimizing physical interface, increasing accountability, introducing team-based assessment, etc. Next, we are coming to indirect tax framework. Indirect taxes are consumption-based taxes that are applied to goods or services when they are brought and sold. That is, the incidence and the impact of taxation falls on two different entities. The government receives indirect tax payments from the seller of the goods and service. The seller in turn passes the tax on to the end user, that is the buyer or the customer. For example, GST. See, it is the seller or the manufacturer who pays it to the government. But the manufacturer gets this tax from the consumer. That is, the tax is charged from the consumer, which in turn the manufacturer pays to the government. Now next is GST, Goods and Service Tax. We know that it is a major tax reform introduced in the country. It was introduced to collect and reduce the tax evasion, is easy to understand for the consumer and will reduce the tax burden for the industry. It ensures that there is no cascading effect of the tax and there is harmonization of tax laws. Now these are some of the recent measures taken by the government. Taxation Laws Amendment Ordinance of 2019, reduction of the tax rate to 15% for new manufacturing domestic companies, minimum alternate tax reduced to 15%, removed the dividend distribution tax under which the companies are not required to pay DDT. Now the dividend distribution tax need not be paid by the companies but by the shareholders. They have to file it as their income tax. These are some of the recent measures taken by the government. So that's it about the tax reforms recently happened in the country. Thank you so much for watching. I wish you all the very best.